I don't predict the market. I read it. Every institutional level, every options flow, every move from smart money leaves a trace, and artificial intelligence sees it all.
Good morning and welcome to Dark Gamma's pre-market analysis for August 20th, 2026. Samantha here, joined as always by Billy. The SP 500 is opening virtually flat this morning, sitting at 7,706.6, just a hair below last night's close of 7,707.98. That's a bearish gap of just 1.38 points, essentially negligible. But the market's positioning tells a more nuanced story. Max Pain is sitting up at 7,720, which means the current price is actually trading below that gravitational pull. The options market is quietly suggesting there's room to drift higher through the session.
Exactly right, Samantha. When you're trading below Max Pain, you have to respect that magnetic effect. Market makers have incentive to see price gravitate back towards 7,720 as we head into the close. Now the expected move for today is plus or minus 28.1 points, giving us a range between 7,679.9 on the downside and 7,736.1 on the upside. We're comfortably in the middle of that range right now, so no alarm bells on either side. But that upper bound around 7,736 is the level to watch if the bulls get momentum.
Let's talk about what's actually moving this morning because the sector picture is quite telling. Energy is the clear leader, up 0.82% in pre-market, which is a meaningful outperformer in a session where everything else is barely breathing. On the other end of the spectrum, healthcare is the laggard, down 0.46%. That divergence is worth watching because when defensive sectors like healthcare are getting sold while cyclicals like energy are catching a bid, it can signal that risk appetite is quietly building under the surface, even if the headline index looks flat.
And the Magnificent Seven are reinforcing that mixed picture, Samantha. You've got a clear split right down the middle. Microsoft is the standout, up 1.72% in pre-market, a very strong move for a name that size. Nvidia is barely positive at 0.17, and Meta is clinging to a gain at 0.16. But then you've got Apple, Amazon, Alphabet, and Tesla all in the red, with Tesla the weakest of the group at down 0.35. It's not a rout by any means, but the breadth within mega-cap tech is not convincing this morning.
So putting it all together for the Dark Gamma community, here is the scenario as we see it. The SP 500 is opening in a quiet, slightly bearish gap, but the distance to Max Pain at 7,720 is only about 13 points away. Dark Gamma models would flag that as a realistic target for today's session, particularly if energy holds its gains and Microsoft continues to lend support to the broader tape. The key risk level to the downside is 7,680, near the floor of that expected move range.
The game plan is straightforward. Watch that 7,720 Max Pain level as the primary magnet. A grind higher through the morning toward that level would be entirely consistent with the gamma exposure profile on a day like today. If we see implied volatility compress as we approach the open, that would be a further confirmation that the path of least resistance is upward. The onus is on the bears to defend below 7,700. Otherwise, this market has a very clean path back to Max Pain and potentially towards 7,736.
Well said, Billy. Bottom line for today, a near flat open, Max Pain above us at 7,720, energy leading the charge, healthcare lagging, and Microsoft doing the heavy lifting in mega cap land. It is a session where patience and level awareness will be your best tools. Stay locked in, stay disciplined, and we will keep you updated throughout the day here at Dark Gamma. Let's get to work. On today's macro calendar, the main event is leading indicators at 10:0 a.m., consensus 0%, previous 0.2%.
There are two more events during the session. These releases could drive volatility at the S&P 500 Open.
The Magnificent Seven are showing a split picture in pre-market, with 4 names in the red and 3 in the green, suggesting some rotation rather than a clean directional move across big tech. Microsoft is the standout leader, up 1.72%, while the rest of the gains are pretty modest.
Microsoft is doing the heavy lifting here, and the contrast with the rest of the group is striking. Nvidia is barely moving, up just 0.17%, and Meta is essentially flat at 0.16% to the upside. On the laggard side, Tesla is the weakest, down 0.35%, followed by Alphabet off 0.30%, and Amazon slipping 0.15%.
Apple is also in the red, down 0.13%, so 4 of the 7 are under pressure heading into the open, which gives the overall Magnificent Seven basket a slightly cautious tone. There's nothing in today's macro headlines that directly catalyzes a tech move. The Riksbank commentary around Swedish economic strength is a European story, and the Iran-Iraq parliamentary talks are geopolitical noise with no immediate tech sector read-through.
That means Microsoft's outperformance looks stock-specific rather than sector-driven, and traders will be watching whether that strength broadens out or stays isolated as the session gets underway. With the majority of the group lagging, the burden of proof is on the bulls to show follow-through above yesterday's close.
Walmart kicks off pre-market this morning carrying nearly $910 billion in market cap, with a beta of negative 0.11, making it one of the most defensive names you can hold. And the options market is pricing in a 5.3% expected move on earnings.
That negative beta is fascinating because it means Walmart tends to drift higher when the broader S&P 500 sells off. So a volatile tape around these results could actually work in its favor regardless of direction.
Alibaba is also reporting this morning with a 7% expected move and a much hotter beta of 1.24, while Deere rounds out the pre-market slate with a 5.5% expected move in the industrial space.
After the close tonight, watch Ross Stores as the headliner with a 7% expected move, and OSI Systems plus Flowers Foods are smaller names, but carry outsized implied moves of 7.8% and 7.1% respectively, so open interest in those contracts could get active into the print.
Oil futures could see a modest bid if traders interpret this as a sign of shifting regional alliances, which historically pressures risk sentiment early in the session.
A stronger European macro read tends to lift global growth optimism, so watch whether that translates into reduced put buying and a lighter hedging posture.
0 days to expiration activity today will be critical to monitor, particularly if open interest clusters around key strike levels from yesterday afternoon.
Overall, the setup feels like a cautious open with moderate upside bias, contingent on energy prices not spiking aggressively on the Middle East headlines.
Scanning the nearest strikes to the SP 500 spot of 7,706.6. The 7,750 call stands out with 4,447 contracts and a jaw-dropping 246.61% surge in open interest overnight. That kind of fresh positioning right above spot suggests dealers are hedging a move toward that level, making it a firm near-term resistance.
On the put side, the closest meaningful strike is 7,600, carrying 9,558 contracts with open interest up 166.17% day over day. That build is significant enough to treat 7,600 as the key support floor heading into today's session.
Max Pain sitting at 7,720 is sandwiched right between those two anchors and with the put-to-call ratio on tomorrow's expiry at 2.306. There is clear directional hedging bias toward the downside across the nearest expiration bucket. Gamma exposure around 7,750 will compress price movement if spot drifts up toward that call wall.
The asymmetry here is telling. Call open interest additions above spot are in the hundreds of percent, but put strikes below are seeing even more aggressive accumulation at 6,800 with over 2,091% growth, flagging tail risk protection demand that could pin volatility bids through the open.
Spot on the SP 500 is sitting at 7,706.6, just barely above the gamma flip level of 7,704.5, which is the price where dealer hedging shifts from stabilizing to amplifying moves.
Right. So above the gamma flip, dealers are long gamma, meaning they sell into rallies and buy dips, which acts like a shock absorber, keeping price relatively contained. But we are talking about a margin of only 2.1 handles, so one bad tick could flip us into negative gamma territory and things get choppy fast.
The call wall at 7,755 and the put wall at 7,650 define the likely range for the session, with the call wall acting as a ceiling where massive call open interest causes dealers to sell aggressively to hedge. That puts roughly 48 handles of upside before serious resistance and about 56 handles of cushion to the downside before put hedging kicks in as support.
Bottom line for the open, price is essentially pinned at the gamma flip, so expect a decision point early in the session where a sustained move above 7,755 or a break below 7,704.5 will determine whether we see a controlled grind or an accelerated directional move.
Let's move to the ICT analysis of the S&P 500 on the daily time frame. Price is at actual points. We can see the market structure with swing highs and swing lows marked. The trend shows highs and lows that define the market direction.
Now let's look at the fair value gaps. These zones represent institutional imbalances, areas where price moved too quickly without covering the full range. These are points of interest where price may return before continuing its move.
We also identify the order blocks. Active ones show with greater intensity, while mitigated ones appear more faded. These blocks mark the last opposing candles before a strong directional move, zones where institutions left pending orders.
Finally, the liquidity zones. The BSL marks whereby stops accumulate, and the SSL where sell stops rest. The equilibrium line divides the range into premium and discount zones. Remember, the best long entries are in discount and short entries in premium.
Tracking institutional footprints. The dominant liquidity level over the past year is the 7,572 level, below current price, with maximum liquidity concentration over 5 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 7,754 level, above current price, with maximum liquidity concentration over 4 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 7,707, above the gamma flip at 7,704.
1 sigma range, 68% probability, goes from 7,680 to 7,736. 2 sigma, 95%, extends from 7,652 to 7,764.
On the GX side, call wall sits at 7,755 structural resistance. Put wall at 7,650 is where dealers become forced buyers.
The top institutional whale levels nearby are 7,756 and 7,754. These are the highest liquidity concentrations in the market. Expect reactions there.
The scanner detected 7 new institutional entries today. The largest is CLACP at strike 224, with a premium of $57.3 million and over 13,482 new open interest contracts.
Additionally, 10 previously detected contracts have confirmed institutional accumulation with open interest growth above 20%.
This is the most important signal we track. Aggressive ask-side execution with growing open interest confirms institutional positioning, not hedging. Breaking news from the Dark Gamma institutional scanner. A significant options contract has been flagged as a new entry today on KLA Corporation, ticker KLAC. The contract in question is a put with a strike price of $224, set to expire on November 20, 2026. Total premium registered on this flow comes in at $57.3 million, making this one of the larger single contract entries captured by the scanner today.
That is correct, Samantha. Digging into the volume data, the scanner registered 13,503 contracts at the time of detection. The institutional entry price, meaning the average premium paid per contract, was recorded at $42.41. Open interest currently sits at 13,515 contracts, with 13,482 of those classified as new, indicating this position was largely opened fresh today.
Now for context on how the scanner evaluates this setup. The current contract price is $47.85, compared to the institutional entry price of $42.41. That is a difference of $5.44. In scanner methodology, an ideal setup is one where the current contract price remains near or below the original institutional entry price, and where open interest is flat or growing rather than declining. In this case, the price has moved modestly above entry, and open interest is confirmed growing, which meets part of that criteria.
And finally, on the underlying price level, with a strike of $224 and a premium of $42.41 factored in, the break-even price on KLAC shares at expiration is calculated at $181.60. That represents the price level at which this contract reaches parity at expiration based on the original entry premium. We will continue monitoring this position for any changes in open interest or contract pricing. That is the latest from the Dark Gamma institutional flow scanner. Back to you, Samantha.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.